Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to discuss a little known EU European tax haven for certain people. I did a video not too long ago about Slovenia and how you could potentially pay 4% tax there. Well, we're going to talk about how you can pay potentially 1 to 3% tax, and is maybe a little bit more flexible for certain people. There's some pros, some cons, etc. So you can stick around with that, but I'm going to explain to you where to go, how to do it, what the pros are, what the cons are, where you would want to do it, where you wouldn't want to do it, because it's definitely not for everybody, but for some people, it can be pretty attractive. So before I get into that subject though, if you have not already, please, I would really appreciate if you would subscribe, really appreciate it, and nail the notification bell so you make sure you don't miss out on any videos. I try to produce great content every day, so hopefully share something with you. If you have something you'd like to see, please let me know. And if you are interested at all in these subjects, how to pay the lowest legal amount of tax possible, how to set up an international corporate structure, how to protect your assets, how to form offshore companies, help forming offshore companies, help opening international bank accounts, payment processing, getting other residencies, second citizenships, passports, official, unofficial programs, etc. Reach out to us. You can book a call with me, clarity.fm/Michael Rosmer. There's a link below, or you can reach out to us, offshorecitizen.net, offshorecapitalist.com. Okay. So what is the country? The country is Romania, okay? So this is a very particular regime. It's called the micro-business regime in Romania. Romania normally has a corporate tax rate of 16%, so not that attractive. Certainly within kind of the normal for Eastern Europe, right? You have, as you go west, kind of northwest, et cetera, you're talking about 20+% typically. Eastern Europe typically has lower, kind of 10 to 15-ish range, depending on the country. So Romania at 16 is not especially good. I mean, it's not terrible either, but not especially great. And but you can kind of do much better with this micro business. Now, the thing about this micro business, if I contrast it to the Slovenian one or look at a bunch of the other options, there's a few things we need to be aware of. So there's a few types of people that this works really well for, and there's some that it doesn't work well for. So let's start with the limitation. This is a €1 million revenue per year. Okay, so important to note that it's revenue. All right, if you exceed €1 million, and actually what they do is they calculate quarterly, and I believe it's based on 65,000 euros per month is like what they're kind of assessing around. There's an assessment, they do it quarterly, okay? So that's the first thing. Now the second thing you need to know about this, so how does the tax work? Well, the tax is you get 1% or 3%. This is pretty good, right? 1% tax, I can pay that all day long. 3%, hey, like I get that in Labuan, great. But it's not quite as good as that, okay? So it sounds a little bit better than it is, and the reason is that is on revenue, not on profit. So we see this a little bit in certain parts of the world. For instance, in Brazil, they have a system where you can get taxed based on your revenue, or you can get taxed based on the industry, or you can get taxed based on your profit. Belize has something similar. People are mostly used to Belize IBCs, but domestically, Belize companies, you can have this revenue-based tax, okay? And that was, I mean, sort of what you get in some of these other places as well, right? So where does that make this bad? Well, let's say that I was doing an e-commerce drop shipping business, okay? So I'm probably running some ads to get people to my website. I've probably got some cost of goods sold. I've probably got some staff, right? So first of all, $1 million is not a really high threshold in terms of my revenue before I'm out of this thing, right? Second of all, let's see, like, say that I'm paying, well, let's use the 3%. I'm going to explain to you in a minute what the difference is between the 3% and the 1%. Say I'm in the 3% tax bracket. Okay, so let's say that, for instance, I max that out, right? I'm at €1 million in revenue, okay? So I paid 30,000 euros in tax, okay? So you say, oh, that's 3%. Well, normally you would get to deduct, right? So here you don't get all these deductions. So maybe my ad spend is, I don't know, say I'm spending a quarter of my revenue on ad spend, right? So I'm getting ROAS of like 4, right? So I spent 250,000 euros on that. Then I had some cost of goods sold. Maybe that cost me another 250 grand, let's just say, okay? So that's 500 grand. Then on top of that, I ended up having to pay my staff, and I don't know how exactly that worked. Maybe I'm paying 100 grand, right? So I've ended up spending 600 grand. Let's just, for easy numbers, to make this an easier calculation in my head, say I spent 700 grand by the time I spend out on everything, right? my tech, my payment processing fees, all these different things, right? Because you've got probably 3% in payment processing fees, maybe more, right? So what I'm really left with is 300,000 euros, and I just paid 30,000 euros in tax. Well, that was really a 10% tax rate, not a 3% tax rate, right? Because normally I'd get to write all that stuff off anyway. Now, this is still better than 16%. That's pretty good, but it's not, totally fantastic, right? Now, on the flip side, if I'm in a situation where my margins are really good, right? So say I don't have all these ad costs, maybe I'm like a service-based business, right? So let's say that, what am I doing? I'm like, all right, I'm providing some sort of services to people abroad. They're paying me for those services. They're covering the expenses. It's pretty much all pure profit. Maybe I outsource to a couple people, so great. Well, now that's a really low tax rate. That's super compelling. Like, I'm going to sign up for that all day long. It's more attractive than Bulgaria. It's more attractive than Hungary. It's more attractive than, Cyprus, maybe, Malta, certainly, etc. Okay, so it's not that expensive to form a company in Romania, fairly easy to maintain one, etc. So now let's talk about the 3 versus the 1%. Basically, 3% is if you're a one-man show, okay? One-woman show, I guess, could be as well. So one person in the business, 3%. If you have just one employee, you pay 1%. Why is this kind of useful? Well, Romania happens to be actually a really great place to hire people in certain respects. There's kind of this joke that Romanian is the second official language of Microsoft. It's a pretty large population, wages are low, you've got some pretty capable people there. I have some friends who have commented they've hired developers in Romania and it's the best developers they ever hired, right? So as a place to hire people, it works out pretty well, right? You could hire somebody for relatively little, right, depending on the skill set that they have. I've looked at some PR people there, et cetera, at one point in time, a number of years back. So that's good. You've got a good talent pool. This kind of makes sense. Now, you wouldn't want to be hiring a whole army there, right? Because then you kind of, again, you have this, well, you get to write off those people and, so does this make any sense? However, what we often suggest in these cases is you can sometimes operate between two companies, right? There's sometimes no need to have a single company. So maybe you have an international company that you run a bunch of stuff through, you run a bunch of your expenses through, you write that off. You don't end up paying much tax on that because there's not much profit there. And then you run a bunch of your revenue through this micro business. And, it's a decent amount of profit if you can get, let's just say you had 100,000 in expenses on $1 million in revenue, right? Well, you're talking about 900 grand in profit, pretty decent, and you're only paying 1% tax on that. So you're paying 9 grand in tax. It's pretty attractive. So what would I say about that? Well, it's not that difficult to set up companies in Romania. Banking is not great, but not terrible. It's certainly more flexible than in some places today when banking can be a real challenge. Like I said, it's pretty easy to hire people. If we compare to Slovenia, you definitely have a better situation in that in Slovenia your threshold is much lower. So if you're somebody who, they're working online, they're kind of a digital nomad, they have a service-based business, they have a digital product, they have high margins, etc., Romania might be a really good place for you. Especially if you're somebody who, I talk to a lot of people that, okay, there's some who are making, millions of dollars a year in profit. Fair enough. But a lot of people are not. A lot of people, if they're making 300, 500, 600 grand a year, this is pretty good for them. That's what they're planning on. They're happy with that. Wonderful. This could be really attractive for you. So anyway, that is a brief little overview of the Romanian micro business tax regime, which is, like I said, it's good for people who, especially if they want to hire somebody in Romania, because it knocks down that other 2%. If you think about this, on $1 million in revenue, basically by having that deduction of 2%, that's likely going to pay for that one employee if you have to put someone in there. So, it's really kind of a brilliant system in that respect. If you're, so if you're going to stay under that threshold, if you want to hire someone in Romania, and if you have high margins, this could be good. Now, the last thing that I want to caveat for you that is really important, hopefully you stayed around this long because could have missed it otherwise, is you need to be wary of dividend withholding taxes. So if you're a foreigner who owns a company in Romania, you have this dividend withholding tax consequence. That could be an issue for you, right? That changes your tax regime quite a bit. So be aware of that. You can, of course, reinvest locally, and there's some other ways that you can work around that. If you're interested, reach out to us. We can explain to you, how to flow money so that it doesn't end up being a big problem for you. But anyway, I hope that helps. Again, if you haven't already, smash the subscribe button, hit the notification bell, make sure you don't miss out on any of our future videos. If you like the video, please give it a thumbs up. If you have any comments, you have feedback for me, please put them below. Very much appreciated. If you have anything you'd like me to see me produce, put it in the link below. If you're at all interested in help with international tax planning, how to pay the lowest legal amount of tax possible, asset protection, company formation, bank accounts, residencies, citizenships, payment processing, etc., reach out to me, clarity.fm/Michael Rosmer. There's a link below. You can book a call or visit our websites, offshorecitizen.net, offshorecapitalist.com. I'm going to see you guys on the next video.